What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol SQ for Block Inc. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. You can see some really outdated levels from back up in here. However, we're going to start from scratch, right, with a brand new daily roadmap. I would also point out that this is the first analysis request from a member of the channel that joined the analyst tier. So I appreciate your support, and this video goes out to you. The first thing I would point out is that obviously we are in a significant downtrend falling out of this area of support roughly around 195. Technically, it's 194.10s. And you can see the importance of that level on the break and retest right here, where we ultimately do roll over on the daily time frame, just really cementing this downtrend in play as opposed to a neutral sideways chop zone. So that being said, the chart is more bearish than bullish just based on that activity there. I quickly want to search for a resistance trend line. I mean, the primary would be somewhere from here, the all-time high out like that. That's obviously not doing us much good in this most recent market conditions. Let's see where something like this comes into play. Yeah, we're still quite a ways away from that resistance trend line, but that's kind of the dominant one in play, noting we have highs, lower high there. There's the first contact point. There's touch number 2 solidifying the trend line. And again, we're not even close to that. So the trend is accelerating to the downside instead of really weakening. So all of that being said, it's just building the bearish case on the daily time frame. Let's come in with a couple of more levels here in terms of areas of importance. I would really start focusing on that as an overhead level there around 136.50s, simply because we had support, then clearly turning to resistance. So, a technical, a technically respected level. And then to search for downside targets, I mean, we really got to search in history to see what we've got for levels off to the left. I'm going to grab a 5-year chart, and we're looking for things underneath 111 roughly. Zooming in on this section of the chart over here, we've got, let's zoom in a little bit more. Underneath 111, that's where we're currently at. So the past breakout point was here, 105. On the 30-minute, you can see that level is slicing right through Monday's low. We'll adjust that in just a moment there. Anything below that, I start thinking about this, right? Like 84.27 coming from resistance. Then when we get the break and retest, it does want to be technically respected. That leads to a little bit of a rally. So 84.25 would be up next. And then the last one I would point out, at least into the near-term future, would be 76.34. Now, don't get me wrong. I'm not saying that we go there into the end of the week. I'm just pointing out where the structure is. We want to be aware if there's some sort of massive downturn. Now, looking at the daily structure, the past 3 days, we're just getting 3 days of balance. And because it's lower, we have to construe that as being more bearish than bullish. We've sort of negated the hammer candle. If it was going to produce a bounce, it should have been up and over the 2-day highs on today's session. Obviously, we know Jerome Powell got on the microphone and kind of ruined things for the bullish posture early on in the day. Let's shift the focus now over on to the 30-minute time frame and talk about the most important levels as we go into the remainder of the week. So I'll take out the hand tool and just adjust this to Monday's low because we know that's a little bit more important than that level from way off in history. The next thing we'll do is put in the flush point, which is going to be right here around 110.25. Okay, so if that starts to break down, then we're probably going to Monday's lows. That's a breakdown of the 2-day lows. Again, very little structure in here. I would imagine it's retraced fairly quickly. 102.20 is the number. If it's going to turn around, it's really got to hold this area here and then produce a higher high. If we don't produce a higher high, then the risk in square right now is the fact that this potentially turns into a head and shoulders. This is now your neckline. And again, breakdowns here easily take us to Monday's low, if not lower, just continuing the daily downtrend. So that's the risk inside of square in terms of a pattern perspective. If it's going to turn around, it's probably just got to make it, up and over today's highs. Maybe it's a little bit sooner than that. I might be able to make the argument for this level here at 120.77 coming from support, then resistance, rejecting it at high of day, and then breaking down into the afternoon. So there you go. It's got to be up and over 120.77, or at least not an equal low again to 110.23. To preserve this or potentially form some sort of bottom here and confirm that, yes, this area will be used as a higher low. We can move onward and upward from there. So those are the main areas to focus on inside of square. Hopefully we've hit home the point that this chart is overwhelmingly bearish. There are some very particular things that need to happen for you to become bullish on the chart, specifically that higher high up and over 120.77. Without that, any subsequent tests of 110.23, not looking so good inside of square. That's going to wrap up the video. If you enjoyed it or learned anything new today, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.